Well, construction companies have been in a bit of strife lately. You might have heard in the news. Just the other week, the Lloyd Group went into administration, leaving the new art gallery in Bega, the Southeast Centre for Contemporary Art, in limbo. There have been a couple of smaller construction companies that have run into trouble, leaving bushfire survivors high and dry mid-build. And the collapse of large construction firm Porter Davis has affected about 1,700 home building projects in Victoria and Queensland. So what's behind these company collapses, and are we likely to see more? Brian Seidler is the New South Wales Executive Director with the Master Builders Association. Brian, good morning.
Good morning.
Thanks so much for joining us. Look, are times particularly tough in the sector at the moment?
Look, certainly some high-profile builders have obviously felt the problems of the industry and the challenges of the industry for probably the last 18 months. So we've had the large ones, as you've noted, particularly hitting some of the regional centres of New South Wales, but we've also had some very large builders commercially not survive. And, you know, to some of these large companies, particularly the Porter Davis group, things must not have been in order for a long time for that to happen, with 1,700 homes being non-completed. But look, if you look at the average of the last 10 years of builders going into administration or liquidation, it's on average. It's about average,
right,
compared to those prior to the pandemic. So certainly, I think what we're seeing is higher profile and larger companies with problems. But it's going to be very interesting to see why these companies actually failed, and I think there's a lot to it rather than just, the perfect storm that's been labelled to hit our industry.
Okay, so while, as you're saying, that the failures are not particularly above the norm, do you suspect that there is something new or different going on?
Look, in the last 18 months to 2 years, we've experienced a whole host of issues that we haven't in the past, and while it's not at the forefront in media reporting at the moment, but we had massive impact on product costs and provision of products because of bushfires, particularly timber. And in the southeast part of New South Wales, we even had one of the two major mills which provide most of the framing timber for New South Wales destroyed by bushfire. And then, of course, the pandemic hit, and that meant a whole host of restrictions was placed upon the industry, not so much in the regional centres, but certainly when you're talking about supply. A lot of our product comes from overseas and in containers, and containers weren't getting through. And so what that meant is suddenly there was a doubling in some ways of costs of freight, which impacted on the entire industry. So we had an explosion of product prices, and I might say that they're now levelling out, but we're not seeing a decrease in the costs of materials. We're seeing availability is better, but the costs are not coming down. But the big one I think for the entire industry is labour supply.
Right.
And that's an issue that has plagued our industry for over a century, over 150 years. And I say that because we're looking at the anniversary of the Master Builders, which is celebrating 150 years this year. And it's interesting to read the minutes of meetings that went back to the late 1800s, where training our young ones to come into our industry was always a problem. And so things have changed in the last decade, particularly of how do we make our industry more attractive to get more apprentices.
Yeah.
And that's a big issue for us.
Interesting. Is there a problem in the industry with fixed quotes? Because, a company might give a quote and say, that's what the price will be. And in the meantime, there's lots of delays, as you say, staff shortages, rising wages, cost blowouts in terms of materials and supply chain issues. and by the time the boots are on the ground, so to speak, everything's a lot more expensive. Is that
Yeah,
part of the problem?
yeah, without question, you're right. The other issue for the building industry is during the pandemic, and we're still impacted by that. What builders would do is give a fixed price or a fixed price contract to build, let's say, a standard home of $500,000 or $600,000. And in that fixed price, the client or the consumer will expect that anything and everything that would impact on the build would be in that price. In other words, there would be no movement in that price. And banks like that because they lend money on the basis of a fixed amount. Now, with the huge increase to cost of materials, particularly 40% to timber and 39% to steel, and then we had nearly every other building product impacted by the pandemic or shortage of availability of materials, builders were asked by the contract or directed by the contract to absorb those increases, and there was no escalation. So one of the issues that the Porter Davis people are saying that they were unable to pass on any increases to the consumer or to the client because their contract and indeed legislation in Victoria doesn't allow them to do that. So you won't find too many contracts, I don't think, and certainly Master Builders is recommending to its members to have what they call a cost plus contract. That
Right.
means you identify the costs and then you put your margin on top of that, totally transparent. But what that means is that the builder who might take a little bit of movement in any price. They predict there might be up to a 5%. They might be able to build that into their lump sum, but not to the tune of 40%. So that's been a real problem for builders right across the board, whether it's in residential or a commercial building. They haven't been able to pass on or absorb those costs. And it's interesting, if you talk to some clients are so commercial about this that say, well, what's the pandemic? What's COVID-19? That's not in the contract. We haven't allowed for any increases in your price because of COVID. No, you've got to build the job for what you quoted us. So there's in some instances, no leeway, and that's bad because in the end, the builder will say, well, I can't do it, and perhaps pull up stumps and say, see you later. And then the client will have to find another builder to take over the job, obviously at higher rates because they will price the job at a higher rate based on the current rates, and that will cost and there'll be a premium. Usually there's a premium if a builder takes over someone else's jobs.
Okay, and why is it thus? I mean, there's so much business out there. Why are companies feel like they have to lock themselves into a price that they will deliver, even if all the costs change in the meantime? Why are companies struggling to balance the books when there's so many people who want builders at the moment?
Well, look, it was a period of the last 18 months to 2 years where a lot of prices also backed on the basis of governments, both state and federal, giving allowances or grants to consumers. Say, if you start building within a certain period of time, we'll give you a $25,000 grant. And so the most important thing for the consumer was to lock in a contractor on a particular amount and see that through. And of course, during that period, prices have skyrocketed. So you probably see less and less of that now. And in fact, if clients and banks still say we've got to have a lump sum contract, well, then you'll find that prices of the lump sum will go up to accommodate any increases that are unforeseen.
Okay, and the other big factor you talked about, one which has been a factor for about a century, attracting more young people to fill this skills shortage. Are there any new ideas in that space, or any low hanging fruit that you think our new government at a federal or state level should grab?
Well, look, the big issue, the historic feeder for the building industry has been through the tradespeople, has been through apprenticeships. And it used to be a 4-year apprenticeship, but now based on time served. Now it's on competency. So you can, in some instances, have apprentices finishing their training within 2.5 years. Whether they're competent across the whole scope of things is questionable. But the problem for the industry is we're not attracting the tradespeople like we used to. So it's a problem for the industry. Perhaps it's deemed too easy to get into the industry. That is, it's the low barriers. We should be revisiting what it was like to be a master tradesperson, and so the industry's currently looking at that.